Hi, welcome to this quick tutorial about stock splits. A stock split is when a company splits its stock into smaller units while increasing the total number of shares. We are going to talk about the characteristics of a stock split, and then I will walk through a basic example that illustrates those concepts. A stock split must be authorized by a company's board of directors. A stock split will increase the number of outstanding shares by the announced split ratio. For example, if there is a 2-for-1 stock split, the original number of shares would be multiplied by 2 to get the new number of shares. A stock split will apply to the number of issued, authorized, and outstanding shares. The per share price decreases, but the original share price is divided by the stock split ratio. A stock split will not affect overall stockholders' equity. No accounting journal entries are needed. A stock split is basically a cosmetic event. Next, we are going to talk about why a company might want to split its stock.